Do you think the market is reading the tea leaves right, that we're going to either see a pause, a hawkish pause, or a skip coming up? And could today's CPI report, could that change that?
Yeah, so I think it's really interesting to note that there's still about a quarter, a 25% chance in the markets that they actually move interest rates up this month, which is very unusual. Usually we have pretty much 100% market pricing for whatever is expected at a Fed meeting. Ahead of that meeting, the Fed's pretty diligent about broadcasting what it's going to do in advance. And so I think that it's pretty notable that there's still some thinking in markets that it's possible things could change this month. And I think that has to tie back to this inflation report. If we get a blowout number, if it's a real surprise to the upside, I think you could definitely see a world in which the Fed does feel pressured to go and be a little bit more aggressive than it otherwise would, or at least investors are betting that's the case.
Yeah, I think investors are betting on quite a few things. Our Steve Leisman was on air yesterday, said that investors are also betting on a pause in July as well. So in between now and then, we got a lot going on. We're just talking about the central banks. We also get another PCE report. Remember, that's the Fed's preferred gauge of inflation, another jobs report. So in the in-between time, I know you're one of the people believing we're going to see some type of pause tomorrow, hawkish pause maybe. In the in-between time, what's the most influential report we could see that gives us some insight into July?
I think that the next jobs report is going to be absolutely essential. I think a lot of the reason that people are questioning whether the Fed can sustainably stop is the fact that hiring has still been so strong. But at the same time, we've seen jobless claims tick up pretty substantially. So if those are the real signal, if what is actually happening is the weakening we're seeing in jobless claims, then I think the Fed's going to feel a lot more confident saying, this isn't just a pause, we're done, just stopping rate increases altogether. If, on the other hand, job gains continue at the rate that they've been at, is so fast, so rapid, so unusually strong, I think the Fed's going to have a really hard time just saying, this economy has sufficiently slowed down and we can feel really confident that inflation is going to come back down to goal now.
Gina, we talk about sticky inflation a lot. Often we're talking about shelter, we're talking about food, but you're actually looking at what we call usually on the show experience spending on hotels, airlines, and things like that. How does that impact potentially the Fed's decisions both tomorrow and in July?
Yeah, so this is a small portion of overall inflation, but it is a pretty relevant portion of that sort of super core index that we know the Fed is watching really closely, the services excluding housing, excluding energy indexes. And so I think, these indexes are interesting because they've been a part of the really big services inflation that we've seen over the past year and a half. And so I think that what they really tie back to is this real pop in spending that we saw in the wake of the pandemic. We saw some revenge spending. People didn't get to go on vacations. A lot of weddings were canceled, and all of those things started happening again in the summer of 2022. Now we're really seeing those inflation sources start to fade. And so I think if that continues, it could be good news from an inflationary perspective. We could see a situation where airfares, hotels, meals out, all of those things start to be a little bit less additive to the inflation picture. And we're already seeing that start to develop. So I think that's a trend to keep an eye on.
So, Gina, there is a camp that believes we could even see a cut later on this year. Where do you stand when it comes to that?
The Fed has been very diligent about saying that camp is wrong, but things change. So I think that in order to believe that, you have to pretty much believe that we're headed into a recession and that recession is pretty imminent. I don't think that's what the job market looks like right now, but things can change quickly.